hopefully you all had a chance to join us yesterday for the Gamma Report. That was a lot of fun. Kane and I talked after the show. Some more, just looking forward to the segments every Monday. I am going to talk through, I don't think I have a label on this, but we're going to kind of do a breakdown, anatomy of a trade or strategy breakdown. I don't think I have it on here, but I'm going to do some collars today. So the reason why is I took profits on gold and silver. I'll bring it up on the workspace here. So I made the executive decision to protect some profits. GLD, grab some profits near the high around 359. That seems kind of crazy that it's already up with a gap higher. 359. Let me see where I closed out for the credit yesterday. GLD closed at 363.75. So I missed out on a couple of dollars to the upside with this pre-market, but that is okay. If we're nearing that 4,000 handle, what I'm looking at is establishing a core position and being able to protect myself to the downside. So if I'm establishing a new allocation to GLD, I want to have the financing where I can still get gains to the upside, but get it called away to the, or I'm sorry, get it appreciated and called away to the upside, but also protect myself to the downside. And I'm going to try to finance that for as little as possible. What's kind of insane is how this thing has looked since, I wouldn't say since 2024, but yes, since 2024. I mean, up, sideways, up, sideways, up, sideways, up. I mean, if you're talking wave structure here, this thing has to be done with a 5 wave or close to it. And if it's not, technically something is broken. But look at this gold. Overbought with divergence, weekly, all these things. So it's just not ready to turn yet. I don't know if it's what it's waiting for, seasonal time, dollar time, risk off time. It's gold is the ultimate asset right now, which kind of makes it fun to have. So anywho, we are opening up a little bit flat today. Futures 0.17, maybe inching out those fresh all-time highs. Let's go to the SPY. 672. So it looks like we have a bit of an open here to the upside. 0.19. So actually S&P is up just a little bit higher than futures this morning. And let's go after volatility, which remains above 16. Let's get our daily profit play. Here's our box. I posted a screenshot yesterday. We were just above. So we kind of opened near the 50%, came down to try to retest the gap. Ended up going up to the 50%, closing pretty much right at it. Had you sold just the 50% ATR, it would have been a partial loss yesterday, which would not have been fun. Unfortunately, I didn't get filled on levels that we were looking for. I wanted that 60 by 65 for the bear call side of an iron condor, didn't get filled. I wanted bear call spreads at 70, 75, didn't get filled. So even that run from this low to high did not fill in the upper levels. So we're going to recenter this today. This is around a close of 67.40. So let's go 67.40 on the daily profit play. We have VIX at 1625 right now. And let's get our levels. Drag this over here. Okay. So ended up raising some additional capital yesterday, closing out some GLD, SLV positions, gold and silver protections. I'm looking at SLV to reestablishing new core positions. And this is in addition to wanting to dollar cost average. Kane and I talked about it yesterday on the Gamma Report. I think right now the easiest trade on SLV or GLD is just to set pending orders and dollar cost average into a chunk you're willing to spend. For a lot of my accounts, I'm looking at like a $10,000 to $20,000 allocation in gold and silver. And the best thing to do is take a chunk of $2,500 and throw in 4 trades. Take a chunk of $2,000, throw in 5 trades. Throw in a chunk of, $3,000, $4,000, throw in 5 trades, right? Depending on what that dollar allocation is. If you're only interested in, I'm going to invest $1,000 in gold. We'll do it at $200 and go to all these different moving averages that are lining up on the daily time frame. So something like the daily time frame, allocating a position here. Why not sell puts? I already have, David. I beat you to it. I sold lots of puts. In fact, that's all I've been doing for the last 6 months is selling puts. So puts look good, but I'm talking about if we're going to continue to go. I mean, I can't really think of the chart going dramatically higher, but I don't know, man. I mean, we're at all-time highs on gold, overbought conditions, but what does it do from here? Probably pulls back, right? But if it goes sideways again, and all this is another round of accumulation, is it sideways, 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 sideways? My puts just expire for profit, for income, and we have another leg up. I have no idea, right? I mean, I've been in this gold train and bull train, this bullish train on gold and silver for like the last 2+ years, actually since 2022. So the fact that I'm taking profit now, it's not like this is an easy decision. I've been riding this thing for a while, and it just made sense as far as like portfolio allocation. I had to trim things back. I mean, I had a 5% stake in gold, 5% stake in silver, 5% stake in Bitcoin. Silver has more than doubled. Gold has nearly doubled. And I can't keep that running hot going, knowing that there's a bunch of profit I would be giving back if there is a 15 to 20% correction coming sooner than later, especially based on a bar count that I'm watching. Okay. So, again, worst case scenario is I took profit and now I decided what to do with it. But if I'm going to establish another position buying shares here, I certainly don't want to be on the hook for a pullback that's going to cost me money. So I'm thinking today I'll walk through it. I want to look at the math at it. But if I buy shares and I can finance a call with a short-term put or a nearer term put, maybe out 3 to 6 months, and I put my call out 12 months, as long as I can keep this debit very minimal, I get the kind of dollar for dollar protection to the downside. So if we pull back into here, I can still have a put to protect. I can play around with the numbers on the option side. I can close out the call, close out the put, take a net credit, reestablish a new core position, calculate my break even. So the hard part is, do I want to get in at these highs? Do I think there's way more room to the upside? Well, long term, yes, but short term, no. Okay. So part of me being somewhat disciplined and patient would be thinking, well, maybe I don't do anything. Maybe I just let price pull back. Okay. But I was waiting for price to pull back here. I was waiting for price to pull back here. I was waiting for price to pull back here and never did. So we're clearly in a strong bull market, and I don't know if that train is going to feel like stopping. Because what causes that? Like why would gold do that? Right? Why would gold shift and all of a sudden drop 15 to 20%? Something with the dollar has to be. I would assume something between bonds and dollars has to be the reason that we have a gold shift. Unless we're talking like major repricing of the gold standard again somehow in 2025 or like a modern gold standard. I have no idea. But all that is just looking bleaker for the dollar. Right? But I think that the dollar index catches a bid. This is what I drew up yesterday in my final hour session. If this is a falling wedge, let me change this to black. If this is a falling wedge on the dollar and this gets squeezed up, I mean, I think I took a screenshot of this yesterday. So right here, I mean, if we stay in this wedge, this would be the continuation of this S&P melt up. If we get a break above this falling wedge, this would be dollar strength and S&P pullback. That could also mean gold pullback as well. Just because I think so much is hinging on, a dollar bear market versus a dollar short-term retracement or correction or squeeze with a crowded trade. We get this thing to pull back a little bit. So it's a pretty good technical spot to watch on the dollar. It's up today. Yesterday was a crazy day in currencies. Japanese yen, just insane move. I haven't seen a Japanese yen move like this, especially with the gap open. So looks like there's a new prime minister, surprise win, and this prime minister is kind of more schooled in the Abenomics regime, and that could mean like a more dovish BOJ. I don't think they can necessarily suppress Japanese yields, but it looks like the plan of raising rates is going to be put on pause. So they'll remain at maybe 0.5%, 0.05, 0.5% for a while. But yeah, that's interesting. So I think, small trade and bigger picture, would be this. FXY is a way that I hold the Japanese yen long. I don't know if it stays here, but to me, this is an inverse head and shoulders. And if we break this neckline, this would be the dollar equivalent of breaking the 140 floor and going to the 120 measured move. And that would be my FXY breaking 65 and going to about 75. Okay. If this comes back down to these lows, if it comes back down to these lows, I'm going to add more shares of FXY and it will be a hold, 59 or 58 or $57. If I think we get back to 65, there's a nice upside gain there. If we complete this move and the dollar does get to 120, then there's obviously double the profit. So to me, this is the more cost-effective way rather than dealing with negative swap in the FX market, trying to get long the Japanese yen and looking to see if there is a deleveraging at some point and there's a repatriation back to the Japanese banks. Okay. But I've said this before, if we see this type of move happening where the Japanese yen gets really strong, it's not a good sign for risk appetite. What's your view on crypto? Well, crypto is to me just Bitcoin. That's the only one I really care about. Bitcoin, Ethereum, I'll play. Meme coins, fart coins, Trump coins, Melania coins, you name it coins. I don't care. Maybe I should, but I don't because I think they're all due for pump and dumps. I think they're all potentially, I don't know. And you can make a case. Well, what about Solana? What about I don't care. Bitcoin to me is like trading the S&P of crypto. So if I want to hold something that actually is like the gold standard, Bitcoin is about the only allocation that I care about. I've traded Ethereum, traded some ETAs or ETFs, but IBIT and FBTC are the only ways that I'm playing it outside of what I have in my, like personal wallets and stuff and the cold storage things that I have for crypto that I've started back in like 2016. But Bitcoin's all I really care about. I think that's also going to be, your biggest market cap. Okay, we're at 124. We poked the highs around 126. I've got a measured move up here towards 130. I mean, what Bitcoin is, in my opinion, is probably the perfect digital adoption play. I mean, if we are basically force feeding this economy to adopt AI and spend in AI, that rebuilding, that investment, that R&D, I think that's all good for crypto. I think it's all good for Bitcoin. Okay. I just don't want people to be tossing money thinking it's like, well, this coin and this coin. It's like, it's impossible. There's so many ICOs and so many coins come out of nowhere that I have no reason to trade other than chasing something. And I don't want to chase it. I mean, Bitcoin is averaged over 40% a year for over a decade. I don't need to chase something that I have no clue on what I'm trading. So I'm good with Bitcoin. I'm good with maybe Ethereum, but Bitcoin to me is certainly more mainstream. You've got BlackRock's hat in the ring. You got Fidelity. You've got, it's now part of, investment portfolios across the globe can actually allocate to Bitcoin. Financial advisors are finally getting on board. So there is the same reason you have forced buys in the market with 401ks. You're seeing more and more of this of, maybe like a 1 to 3% allocation through financial advisors, which is trillions of dollars. So, market cap wise is 2.49. I remember when it was under $1 trillion, right? Now it's 2.49. I think the big story here that continues to make Bitcoin really interesting for future investments and flows is we have a $40 trillion bond market that I think people are willing to reallocate a portion of that. If $40 trillion, let's just use simple math here. So we have a 40 trillion bond market cap, right? Let's say that 4 trillion is going to leave. Let's say it goes anywhere else, goes back into equities, goes into gold, goes into silver, goes into commodities, goes into Bitcoin, goes into anything that is a store of value, right? So the bond market is still super liquid, super important. It's greasing the wheels of the markets of the world's debt. But if we're going to see the bond market cap be reduced and going elsewhere, it wouldn't shock me to see these inflows come somewhere else. And if market cap goes from 2.49 to 3, 2.49 to 4, 2.49 to 5, you're talking about doubling the price of Bitcoin. So that's where I think, I mean, and this isn't like a hate on the bond market. I just think, look, you've been in a safe haven asset that's been in a 5-year drawdown. Why do bonds look attractive now? I mean, I think that you're going to continue to underperform and be disappointed by, um, I don't know. I mean, if you take it maturity, that's fine, but I just don't, I wouldn't want to get stuck with duration in my bond portfolio. If I'm out, 10 years, and I mean, I looked at I think the 5 and 10 year right now, we're up over 4%. That was the only thing in the bond market up over 4%. I looked at this yesterday during my final hour session because this whole idea of like T-bill and chill, I mean, I get it. People think like, well, I can just park it risk free. Well, I don't believe it's risk free. I mean, I think unless I mean, you're going with banks and backers that are ostensibly too big to fail. But if I go trade bonds just to look at what's available in the market, right? I can do a certificate deposit for 4 and 4.20 going out 5 and 10 years. So if I did, I park my cash in a bank, I'll choose a CD with a huge bank. It could be a JP Morgan, it could be a Goldman Sachs, it could be a Wells Fargo, Bank of America. I don't think those banks are going anywhere, but I've got to park it out 5 and 10 years to make 4.2. That's fine. It's fine. It's not exciting, you know. Also, what if inflation gets higher? What if inflation goes from 2.7 headline to 2.9 to 3% to 3.1? All that's going to do is eat into this cash that I can't touch, right? So I don't love that. And I mean, it wasn't that long ago that this was over 5.25, 5.4. In fact, that was when I actually participated in doing some CDs and bonds where I was going out 3 to 6 months, doing 12-month money markets for 5.25, 5.5. And I did that in my, IRA. So it was a portion of it just to have some safe capital with some yield, but that was about it. Okay. All right. So levels for today, VIX at 1621. We're opening up just around the highs. ES is giving back a little bit of those gains. We open up here in about 3 minutes. Let's go to my workspace here. Okay. So yesterday was a really odd read on the gamma levels. So I'm looking at SPX here. We're opening up a little bit higher. I'd like to sell into these highs. Positive gamma, as long as we stay above 63.70, it's positive gamma. One thing to look for this morning would be if we come down to 67.30, does it bounce back up? I've been seeing this as a very reliable support level for the last several months. So I mean, and again, it's hard to just bravely call the bottom here because you never know if price is going to come down and find support. But if it stays above this positive gamma level versus negative gamma, we bounce here, we go back up. That's a really good spot for a kind of tight, high credit bull put spread. And if price elevates off of that, tries to find, these higher levels, I mean, you can pull in a really good profit there. You just have to be brave and play this thing in the noise, right? You want to survive outside of this. This is why I look at my daily profit play indicator because levels I'm watching are the hard ones to get. It's hard to get to the 100%. It's hard to get to the VIX box higher, the 150. Same thing down here. So I like to sell my bear call spreads up here, sell my bull put spreads down here, and get the credits that I want. I didn't take the trade yesterday because the trade I liked was only offering about 80 cents on the dollar or 80 cents out of the $5 spread, and I just wasn't going to settle for it. I put in a pending order. It didn't fill all day. And that's fine. Okay. Larry, you got that? Yeah, BIL is good. It's still getting BIL is like a short-term treasury mix. You're getting somewhere between like 3 and 4% right now, which is not bad. It's probably in the 3 to 3.5, I would imagine, but still unallocated cash. It does work pretty well to have BIL in the portfolio, and you let it run for like 30 days. It's pretty much made whole, and that's a good little bump on unallocated cash. Okay, all right. So we got 1 minute. So let's calculate our high and low based on the VIX at 1621. It's just over 1%. 1621. So 1.01. So around 6805. 6805 to 6810. And 67 or 6675. So those are kind of the extreme levels. Looking at the daily profit play, roughly the VIX box high and low. It's doubtful we're going to reach those levels. I'll look and see whether we have, more positive gamma flows to the upside. Let me open up my dynamic trend here. 4.15, nice, man. Yeah, that's really good for unallocated. All right, so we're opening up live market gamma. 67.48 positive gamma around 67.30. Can I sell into this, 80 to 85 zone? I know that's kind of far away. That's 40 points higher, but let's see if we can get something into it. So for the 7th, SPX. So 50% ATR is at 63. How high can I go? What do we have on the top gamma level here? 75 is my top level. I'm looking at the 100% ATR around 67. I think I'm going to look at like a 75 or 80 today. So these aren't bad. 75 or 80. Not bad. Seems like these deltas should be shifting a little bit. I'm going to try to go 80, 85, 75, 80. I will try for an 80, 85 for a buck. Okay. Bear call spread, pending order. So 80 by 85 bear call spread. That's just under the 100% ATR. Okay. So this is 78. And I'm looking to sell just above that. So 80 to 85. And then I will do higher than that, the 90 by 95. So 90, 95 for $1. Some penny and bear call spreads. If right out of the gate you want to jump into a bull put spread, obviously the market wouldn't surprise me to kind of make its way up to all-time highs, poke these highs, hit the 50% ATR. But hopefully we're going to see another day where between the 50% and the 50% ATR, which are my levels right here, that it goes with some resistance and support in this level. But right now this market is, again, that's a pretty aggressive move right out of the gate. This is aggressive price action here right out of the gate. Let's see if this is kind of angry enough and aggressive enough to get us filled at a premium. And hopefully we get our trade, way up here. So I've got the 80 by 85 trading for 40 cents, the 90 by 95 trading for 17. If I went to the 70 by 75, that's offering close to $1, but that is now, I don't know, it's possibly test worthy. It's like the point is, if I'm calling the ceiling here, the line in the sand, I don't want this to be threatened, right? So it's a good fill at 90 cents, but maybe this one is more. Let me see where this. Johnson & Johnson just got filled for $1.50. Oh, that's a ratio spread. Okay. We have that was for Project Options Edge, actually. We got filled on a Johnson & Johnson pending order. Okay. So that is project. I'm just updating the tracker. J&J. All right. Just got filled on a ratio spread for Johnson & Johnson. Right here. So this is project ratio spread. We put this one as a pending order to $1.50, just got filled. So that is out to July. Okay, price making its way up here. Recent highs. I mean, we're right at the. I mean, we're officially poking an all-time high again today. Waterfall trade. Yeah, we had one yesterday, Rob. A new trade got posted on Waterfall yesterday in the live session. I mean, we trade every Monday, man. Every Monday, 11:30 is a live session. Trades posted. Oh, you know what? Did I not post? Deanna, did I not post a trade for you yesterday? Son of a biscuit. Yeah, the trade's posted. I totally did I not post that official alert? We took the trade in the live session yesterday. Did I not? Fudge. My fault. So there is a trade for Waterfall. Yes, it should have been posted yesterday at noon. That's my fault. I took the trade live in the session, but I did not post it as an official group trade. It's still valid. The trade is still 100% valid. You could probably get filled at the same level that I got filled at. No, it's fine. So trade from yesterday. I'll post it here. Waterfall. Deanna's coming at you in 15 seconds. Waterfall income. New trade. And we got filled for 50 cents credit. This is a 50 cents credit, likely profit, $10 profit trap. Break even price is 5689.50. So as long as SPX is greater than 5689.50 by expiration, full credit. And the risk on this trade would be, I think we're risking about $14 on this trade. So that is a 25 minus 10 minus 50. Yeah, 1450. All right. Trades in, trade still valid. Okay, let's see here. What was the plus minus on the? Anybody catch the plus minus this morning? It's clearly less than what it was at the open, but I'm just curious. Let's go SPX. I've got a plus or minus 17 right now. So right now my 70 by 75 is still offering 90 cents. It's tempting to take it, but like I said, if we're just going to keep drifting higher, I mean, that's just above the 50% ATR. This one is 63. So either we're looking at getting filled, looking at the 50% as resistance, or I'm trying to go up a little bit higher, making it more difficult. But it's, I mean, bullish. It's all call sentiment right now. Uh, 20.5, Tom. Okay, thanks. Yep, pending orders in Telegram coming your way. So I just have two pending bear call spreads right now for daily profit play. I chose the 80-85 and 90-95. Pending orders, SPX 10-7 expiration. Sell 6780, 6785. Dollar credit. Six, 790, 6795. Okay, posted in Telegram. Pending orders right now. So we're kind of slowly making our way up towards that 50%. I mean, this is a gettable target. Let's see, your 630, 20 wide buck. Okay. All right. Hopefully your sell calls are below 40, just in case we come back down to this gamma pivot zone between the positive negative gamma at 67.30 or so. Nice. And if we are looking slightly higher, I mean, getting to the 50% or higher, anything above like 55 or 60 would be good on having the bull put spread in the money. Thanks, Deanna. Okay. So I will let those bear call spreads marinate. If you're interested in just the standard daily profit play, 75 by 80 and 20 by 15. I mean, not a bad trade, to be honest. Get filled for $1. If I can get this for $1, this is a better fill than yesterday. I think the call side still gets threatened a little bit. I don't love this position. But 67, 20, and 15 is just around. I mean, it's kind of dancing around with both levels of the 50% ATR. All right, Lear says it did the 75 and 20. So the 75 by 80 and the 20 by 15 for 10 wide. Oh, wow. Okay. So you went 75 by 85 and 20 by 10 for 75 cents. Okay. I'm seeing that the 75 by 80, the 20 by 15, that's pretty delta neutral. I mean, that's a 14 delta call. That's a 13 delta put. I mean, if price is pretty chill today, I mean, grab 95 cents. You can probably snag a quick 20, 30 cents out of that trade if price is quiet this morning. I am, Bill. Yes. We talked about that yesterday in Waterfall. I'm still holding that 68.25 butterfly. Yep. So my butterflies, this one here, the 68.25, it's up. It was up about 40 or 50 bucks yesterday. Now it's up 5. So I mean, it I guess potentially could be threatened. This initially, when I took this trade, was like a 10 delta. So I'm hoping it's going to be safe for this week. But I have the 68.25 and the 68.35. Both of these are running. So this one is up about 10 bucks. This one's up about 40 bucks. These are Friday expirations. So I'm again, I'm hoping that both these turn out to be profitable. I might end up taking a loss on a 6640 by 60 for Waterfall. It was part of one of our trades we had to roll out, and I mean we took a deep dive into it yesterday. If I looked to roll it, it was going to require another debit, so I didn't want to roll it for a debit. So I'm just going to kind of pay the piper and realize if price doesn't drop to 6640 this week or reduce that risk, then it is what it is. But I'm curious how this week plays out. I mean, we don't know if we're going to have data this week, right? FOMC minutes are tomorrow at 2. We have unemployment claims supposed to drop on Thursday. We have non-farm payroll supposed to drop on Friday. I don't know if we're getting the data this week. And I mean, the market didn't care about it last week, but I'm curious if you're going, 2 weeks into a shutdown, does it look a little bit shakier maybe for some short-term weakness? I have no idea. Obviously, I don't know. Markets in a positive gamma environment look pretty darn resilient. So as long as price every single day we're watching this stuff stays above this pivot point, this is selling puts, selling calls, and price just slowly stabilizes and grinds and grinds and grinds and grinds. And that is our environment. Like that's literally what we're trading every day. So if it breaks this, then obviously, it's going to be a difficult day if you're trying to be in the way, right? I mean, we're sitting at a 16 plus VIX, which means any day we can have like a 1+% swing. Most likely that 1% swing is, I would say, more often to the downside than is the upside, but still, positive gamma is a very real thing. 10-7. Telegram has 10-6. Does it? I'm showing 10-7 right here. That's what I typed this morning. Daily profit play alerts. Are you looking at these? Those were canceled yesterday. Those didn't fill. These are the new trades. Big difference, Larry. Big difference. $1.75, big difference. Okay. David, that's a good fill, man. 80, 85, 20, and 10. You went a little bit. So you went 5 wide call, 10 wide put. It's an interesting play. I kind of like that, actually. Still risk, right? If the put side gets threatened, you're taking on more heat, but not a bad way. It's a pretty good way to skew it right now. Yeah, I agree. I mean, as long as we stay positive gamma, I agree with you. Okay. So again, I feel like, well, market stalls right at the top again. Are we going to work our way lower? I mean, if I want to get a little bit more aggressive on this 50% ATR, I don't know. Let's see. So from the open, 48, if we go up to, I mean, if I sell like 70, 75, that should be fine. Let me see what I can get on the 70, 75. So I have an 80, 85. I could go 70, 75. It's offering 65 cents right now. Um, let's try that. That's a 17 delta call. Let's go a little bit more. Let's go 15. If I can get $1 here, let me see if I get $1 for this trade. Dollar credit. I might have to go to the 20 by, yeah, let me go 20 by 15 here. So $1.10. The heck, dude. It's like my keyboard broke. $1.10 credit. That's under the mid price. $1.05 credit. All right, I've got a daily profit play that's in right now. I'll post this right away. 10-7. It's not an overlap, by the way, so this is good. 10-7 expiration. I am doing the 70 and 75 call spread, 20 and 15 put spread. 6770, 6775, 6720, and 6715. So I got filled at $1.05 credit. So on that, looking for an 80-cent debit or lower for profit. Okay. So 1, 2, 3, 4. Group it. 1, 2, 3, 4. This is waterfall S2. All right. So daily profit play for today for $1.05. I'll set this take profit. I'll go after, see if I can get a 75-cent debit on this one. So if I pull 30, oops. So 30 out of 105, that's a 28% profit target on the credit. Lee says the shutdown isn't resolved by October 15th, which is next week. 1.3 million armed service personnel won't get the paychecks. I know. I think that on these, whatever the pay cycle is, I mean, the reality is they get made whole, but these essential workers are working with no pay. The government needs to reopen in order to get them paid, but they will be made whole. But it's going to be not a good look if you pass a pay cycle with nobody getting paid. So again, I mean, I'm sure there's all sorts of, it's just a circus. I mean, you can't win with Democrats, you can't win with Republicans. They're both awful. They're both awful for each other. I think they're all selfish. I think that, if I could be a public servant and enrich myself and never pay taxes on anything, I think I'd like that job and I'd want to stay in that seat as long as possible. I don't know. I'm just not a big fan of politics. Especially as an investor, all you want is capitalism and a free market, and we don't really have that. It's heavily manipulated, but you know, if you can't beat them, join them. This is a market that if you give it time, look at the overall bias, what this market's capable of year after year through all good times and bad times. If you're a bull with dry powder and a horizon of 3, 5, 10 years, you should be able to make money in these markets. You know, I mean, look, be prepared for at some point in our next 3 to 5 years, we'll probably have a 20, 30, 40% correction. Wouldn't surprise me at all. But if you can come out of that with the cash to buy in to participate in that decline, I know it's scary, but at some point, if you're participating, establishing some crazy deep discounts, the ability to walk out at generational wealth when it finally gets back to all-time highs. Gosh, it's just like literally how everyone has made money the last 2 decades is just buying dips. Some dips are better than others. I'm not super excited about a 1% dip, everybody. That's what we've seen for the last 4 months. Ooh, the market pulled back 2%. Let's buy it. It's like, I can't. It's not a correction to me. So anyway, we'll see how it plays out. Larry, that's interesting. He hopes they're off for months. Yeah, I mean, if you got money to save, I think the hard part is when you got American households going paycheck to paycheck and you can't afford to not be paid. If you need that 2 week paycheck or get paid for the month, and all of a sudden it's like, well, it's coming, but it's hard to float a family out for a month or two when most don't have that saved up. My daughter and son-in-law, Air Force, no pay on October until the 15th. Yeah, I would imagine the 15th would be probably a resolution. I would think that's got to be on the government's radar. I mean, if we look back historically, I think I've got a screenshot of this, or I did. It was something on shutdowns. I mean, they usually don't. I think the largest one we've had was still under 30 days. So anyway, time will tell. Yep, that doesn't surprise me. If everyone sees Larry's comment there, his manager's making twice as much as him, are worried. Yep. I mean, it's funny how people can make more money and grow into spending it, right? I mean, I've got a good friend of mine that's a financial advisor that's talking about, what used to be households at like 120 to 150K were doing okay. That same household now has to be pulling in closer to 2 to 250 in order just to maintain the same standard of living. So it's like the new middle class is like a $250,000 a year income. It's crazy. And I mean, the arguments obviously is that there is no middle class anymore, or it's just getting widened. So, yep. So anyway, it's not good. I mean, this doesn't look good politically. Is there time to right the ship? Sure. Get out of a shutdown, keep the markets pumped to the upside, fiscal spending. And what's crazy is I don't think the fiscal spending is going to stop. I think the government's going to continue to spend. We now have the Fed cutting rates because unemployment's looking a little bit softer, or labor market's looking a little bit softer. And historically speaking, when we've seen unemployment levels go up, you might not realize it, but unemployment levels have gone up in the history of our country, and we still have the stock market going to highs too. So there have been events, yes, in the last .com bubble and great financial crisis that unemployment rates went up and the markets fell. But we've also seen many, many times where unemployment rises, but it's the rate of change is slow and steady, and the Fed is cutting to kind of address that softer labor market, and the stock market continues to rise. Yeah. So anyway, um, this is, I mean, the fact we show up every single day, it's like there are a lot of days where all the stuff that we're talking about on a day-to-day basis, look, my job is let's win the day. All the stuff in the background, that's medium to long term. Have the dry powder by the dips. That's what I think. So what I'd like to do now, let me contemplate something really quickly. So SLV, I took some positions off on SLV. This is one that if I wanted to get in a reestablish position, it's cheap enough that I could put this in all of my portfolios. I think this is what I'm going to do. So all of these accounts have plenty of cash. One, these are all silver worthy positions. And here, all these are silver worthy. And I dumped all my shares of SLV. I do have some puts. I'll just show you right here. So all these accounts, I closed out CEF, so that's no longer in the portfolio. CEF is gone. PHYS is gone. GLD is still holding. These are puts and ratio spreads. So ratio spread, the 284 by 280. This is a naked put combo with a hedge and naked put ratio spread combo. So I am selling plenty of puts on GLD to reestablish new positions. On SLV, I dumped some call options and I dumped some positions where right now all I have are puts. So I have a 35, 34, 33, 32. This is a naked put combo. Let me go 1, 2, 3, 4. So 35, 34, 33, 32. That's a naked put combo. And 1, 2, 3, 4. That's a naked put combo. And 1, 2, 3. That's a naked combo. So pulled in 296, 495, and 495. Looking so good so far. I mean, this one's up. December 31st is near term. Most likely what I'll be doing here. I'm up 95% of the profit. I can only get another, $10 out of this thing. I will probably just let this either expire. It's a 98% chance of profit, or I just take the profit now because capital efficiency, I can only get another $15 out of it. So can I close this thing down? See if I can get I'm going to close this down for like a 10-cent debit. Let's go. I'll go 15-cent debit. I'll close this down for a 15-cent debit. This naked combo is out a little bit further. We still have like a high percentage of profit on all these. I wouldn't mind taking the shares. So what I'm going to do is in all these accounts, I'd like to establish a new trade where I'm going to buy some shares of SLV, which current price is 43.84. If I buy new shares, okay, this is where like the timeline comes in. This is where I can figure out if I can finance my collar. The goal is if I manage my long put, so a collar trade, I'll spend some time in this today. I think this is a good lesson to have. So I'm going to talk about collar trade, which is I own shares. Okay. And then in order to, for protection, I buy a put. And for credit price appreciation, I sell a call. All right. So if I own the shares here, I'm going to buy a put that's pretty tight to price, and I'm going to sell a call that's maybe a little bit higher. What I want to see is, can I do this for a basically zero cost? Because if I do it for zero cost, yes, there's price appreciation. That's fine. I don't mind just getting the shares called away, but to the downside, it's more about having the protection that's essentially free. I want to finance for nothing. Does that make sense? I want to try to finance any downside here without having to pay a put price and increase my cost basis. That's why I would look at a collar trade. Okay, Greg says I'm an SLVO cover call ETF on silver. How is that doing? I feel like there's no way that's doing well because price has just been so aggressive. There's no way you can sell calls on SLV and pull in good premium. SLVO. I feel like this has to be underperforming silver. If it was, doing covered calls in here, sure. But when price has been ripping higher, I don't know how a covered call ETF does any good. If price goes sideways or pulls back, it'll be fine. But will it be enough to, cover the potential like 15 to 20% decline that we may see on silver? Yeah. Well, I'm showing 13.7 dividend. That's great until price drops. And then your dividend is here, but it's kind of helping to kind of offset the severity of that decline. It catches up, but what I can say is if silver goes higher, you will not outperform with the covered call. What you need in this environment is you need sideways silver or a decline in silver, and this fund will do great. but any additional price appreciation, you're likely you're gonna be behind it. I mean, silver's up 40+% for the year. So I mean, the dividend's great. I'll not deny that. Dividend's great. Yep. So yeah, not bad for its monthly income for sure. Okay. So let me take a look at this. If I go SLV with some shares, what I'm looking to do is how long can I go out and finance this? If I went to January 2028, I buy shares at 43.84. So if I buy shares here, can I buy the 43? I can buy the 43 put and I can sell the 46, 47, 48. I mean, I can get all these with price appreciation. I can still pull in credit here. And again, it's depending on where I can get filled at. But if I can get filled on a buy put at 43 and a sell call at 52 for credit, I don't know if this is going to fill, right? Look at this bid price. Bid price, ask price $8. I need a bid price here probably in the eights. So realistically, I'm probably going to have to go more like the, 47 to $48 area, or I go one strike lower. Now I can finance this a little bit easier. Does that make sense? So I want my put to be a little bit tighter to price because I'm trying to ride that thing down to like $30. If we have a correction, this is a daily chart. If we have a correction on silver and we go down to 38, down to 35, down to 34, down to 33, I want to ride that thing, all the way down. That will help me lower my cost basis from 43 and change to possibly down to, 36 or 35. I'll still have my shares. And then once I'm at a spot where I think this is a good support level, then I will hold and try to get back to these highs again. Okay. I still have puts. I still have dollar cost averaging, but this is, for me, a helpful way of kind of establishing like a new position with protection to the downside. So let me see here. I want to make sure I can get filled at a credit first. That's probably, I can, on these accounts here, these are all large enough that buying power wise, it should be decent. I'm buying a put, selling a call. So it shouldn't be, it's not seen as like a naked anything. It's like selling a call at 48. These are all margin accounts, so I can have that permission, but I'm going to attach the shares to it. I just want to make sure I can get filled on this trade for credit. Okay. So, put side, it's showing credit here, The bid ask is pretty wide. Let me see if I can get filled for, if I get filled for 50 cents credit, then I'll add the shares. So not filled at 50. Now it's showing 20 cents, 50 cents, 45 cents. Let me see if this will fill for 30 cents credit. Gives me $6.12 upside. All right, 35 cents got filled on a collar trade. Now I'm going to add the shares. So that is this account right here. So we're at 44 and change. I'm buying the 43 put, got filled for 35 cents credit, and now I'll buy the shares. So now for that account, I go long the shares, and I'm buying 100 shares at 43.80. Hopefully cheaper. 78 is fine. Okay. So I just established a collar position, and I will match this in other accounts. So this is going into my tracker. There it is. I had to find my tab. All right. So I'm going to establish a new campaign position, SLV, shares and collar trade. So buy 100 shares, SLV at 43.78, and buy the 720. So I'm buying the put at 43. So I'll check the debit. That debit should be about $8. And selling the call. So let me see what that breakdown is. So I have my shares. I got my collar. The put was a 720 debit. And 755 credit. So I got filled for 35 cents credit. Now, break even on the shares. I have a break even of 43.78 minus 35 cents. 43.43 is my break even. So now my job is to manage the put side of this trade. If price goes down on silver, I want to ride this $7.20 debit long put to as much profit as I can get out of it and then lower my cost basis. So if this 720 debit becomes a, let's say, $15 credit, well, I can make $8, lower my cost basis by $8, right? And I can also have most of this decay coming out of the call side as well, so I can maybe lower it even further. So my job is to try to get as close to, dollar for dollar, tick for tick to the downside. If we have a correction, I'm going to try to lower the cost basis as much as I can, and then I can dollar cost average in. I can sell those puts. This is one kind of way just to establish a core position, doesn't tie up a lot of capital, and I will add more to it if we get a decent pullback. How would you manage the SLV sells off? If it sells off quickly, then that put side will be great, right? If SLV very quickly drops to this level or this level or this level, and it does it in a week or two, then I will likely ride that long put, take as much profit out of that as I can, because there's plenty of time in the trade, right? Plenty of time in the trade. And you should be able to maintain and preserve that time premium if I close out the option. So a 720 debit, if it drops, let's say down to $36, I mean, I'm in a long $43 put, so that should be at least worth $6, right? So $6 on top of this, I should be able to see that thing trading for like 13 plus with a time premium, probably closer to $14. And I can reduce that off of my net cost. Would you buy another put? Just leave the shares. So if I take the profit off, here's what's going to happen. If price drops, okay, let me type this out. So if I buy, so here's the trade. I bought 100 shares at 43.78. I buy the 43 put for a 720 debit. And above the share prices, I sell the $50 call for $7.55. So the collar trade for 35 cents credit. So essentially I financed the hedge for me, right? Now I do have capped upside. If silver goes up above $50 here, if SLB is above 50, I don't make any additional money. So my break even is 43.78 minus 35 cents. So my break even is going to be 43.43. Is that correct? $43, or is that right? $43 and 43.78 minus 35 cents. 43.43 is my break even. So the most I can make to the upside is if price goes above $50, I make $657 on my shares. Okay, fine. If to the downside, which to me is more important, if I can ride this thing lower and I turn the 720 debit into a $13, $14, $15 credit, I'll take the profit on the credit. I will probably take the profit on the call credit, or I will look at closing. If I take profit here on, let's say price drops, okay, so we'll just highlight step one is price drops, and then step two is I look to manage my put. If I can close out the entire collar trade, if I close out the debit and the credit for a net profit, and I have a new break even, so I'll say that let's say SLV drops to $36, and this collar trade is now showing. So between the 720 debit and the 755 credit, we're going to have The 755 credit on the call side is going to be reduced. So it might be showing like a $6 debit. So I can take profit there. Maybe it's, you know what I'm saying? Like I'm going to get the credit that's going to be showing a lesser debit for profit. So I show a reduced debit for a covered call winner and a higher credit for a long put winner. Right? So if the collar closes, let's say at I don't know, maybe $15 credit. $15 credit. So I know that $15 is not what I take off of. I don't take $15 off of my net position. What I do is I have $15 credit minus the debit that I paid. So it'd be $15 credit minus the $7.20 debit is going to allow me to take off $7.80 from my 43.43 break even price. Does that make sense, everybody? So if I can lower my cost basis 43.43 minus, let's say that $7.80, then I protected my shares now to a break even of 35.63. What I will probably do is close out the collar and establish a new collar trade. Okay. But this is what I tend to do with a collar trade. How much more protection do I need at 35.63? I mean, probably enough so to protect me down to like either 30 as a round number or maybe down to 28. That's about as low as I would see silver going for some type of major support. But you also never know. If you look back to the all-time highs in 2011 and 1980, we had like 60, 70+% declines in silver. So it would probably be wise to just continue to maintain a collar trade. If I'm going to let it get called away, I can still make $7, $8, $9 on the upside, and it just becomes a trade. Maybe I don't ride silver until the cows come home for unlimited upside. But if I can turn it into, you know, $1,000 winner on a $3,500 investment, that's a pretty good winner. Okay. Just got hit on take profit for today's daily profit, by the way, 75 cents. So daily profit was a winner today. That just closed out. Yep. MTB 250 debit. I think we got filled on a, that's MTB is a pinch point. MTB just got filled for 250 debit. So pending order, this got filled. So trade number 64 for pinch point. I'm adding this into the spreadsheet right now, or the Telegram tracker. So pinch point, new trade, MTB, 116 expiration, buy the 190 call, sell the 195 call, 250 debit. This was a pending order from last week's trading sessions. It filled today. 250 risk, 250 max profit on a $5 credit. We are looking for dynamic support on the bull call spread. Okay, so take profit today and daily profit play. Pinch point had a pending order get filled. Let's finish up back here on the collar trade. So I think that the best way to run this collar, instead of getting it separated where I have a longer expiration on my call side and then a put side that I just protected, is just, if you're going to manage it as a collar trade. That way I have shares, I manage the collar, I calculate my break even that way. And then when I take off the entire collar, I can lower my cost basis, establish a brand new collar, and do the same thing. I finance the downside with a covered call. I know that my upside is capped a little bit, but that's okay, and just turn it into an investment. Okay, so I went out a ways. I went out to January of 2028 because I wanted enough premium in the call side that I could go up in strikes and I wanted enough time in the put side where, I mean, if this thing just runs hot, then I guess there's no protection, but that's okay too. But I have a feeling I just wanted all the time premium in this trade. So that way there's plenty of premium on the call side. So I sell that call. And then to the put side, I have lots of time premium. So if we get a near term correction, it should be that, movement and the time premium left in the trade because there's plenty of it. So I can roughly calculate this. If I'm at a 43 delta or a $43 strike on silver, I can show you right now what that would roughly be worth. So let's just throw a number out there. Let's say that SLV drops to the 200 moving average around $33. Okay. So I have my shares, I have my long put at 43, and I've got the $50 covered call. Well, right now, a $43 strike going out to this expiration, that is trading for a 40 delta. A 40 delta. If price drops to $30, we'll just use that as a simple round number. That'd be a $13 move. So it's a 40 delta at a $13 move. That would add $5.20 conservatively, because when the price action is dropping, this 40 delta all of a sudden becomes a 50, 60, 70 delta, right? Eventually it might even become like a 90 delta. So conservatively, I should be able to add at least $5.20 of credit to this trade. But as the delta changes, if price is dropping to $30, that's going to be a 70, 80 delta. So, I mean, I should be able to add probably closer to like $7 of credit, $8 of credit, $9 of credit to this trade on a $13 move. Okay. But right now I can say with confidence, if all we did was move from 43 down to 30, I'm going to get at least $5.20 of lowering my cost basis, which brings me down to $38 on owning the shares, but I'll still have time premium. So possibly another, 50 cents or a dollar on top of that. And then I also have the sell call, which will be reduced in credit, and I can get additional bumps there in lowering my cost basis. So if silver is going to drop to $30, my goal is to have a break even that's around $31 to $32. If I can get a break even there, I'd be pretty happy with that. And then I make the decision, do I still need a lot more downside protection? Or do I think this is enough support to justify, I don't want to protect the downside. I will now just add more shares, dollar cost average in at a much bigger discount, and then look for shares to get back to the highs again. Because if I was going to continue to protect it, what happens if silver, goes here and rips back to the upside in the next 6 months? And I'm like, well, I put on a buy put and a sell call and I don't make any money to the upside. The reason I'm taking the trade right now is because my job is to protect the downside where I think it's most vulnerable. If we're already at a massive discount, if this thing drops 20%, I don't know how much lower I really need to protect. I mean, I think that the reality is, you never know if price is going to go lower, right? But are we going to enter a bear market on silver? I would hope not. I would think that if you go out to this trend line starting from the COVID lows, there's a lot of support off of that major trend line. And then you can even justify, maybe that support on the bigger picture. So until the bears were to break all of this structure, I would say there's not too much more support or protection that I need below about $32 right now. Could you just buy a $34 put? You can, but what's the probability of profit on that? Probably slim to none, right? So that's a very cheap way to do it. Okay. That's a very cheap way to do it. The problem with that trade is over that duration, if price doesn't get down to $34, allowing you to get, this thing at the money, then it's going to be worthless. Right. And so if price falls in here, you might see a little bit of premium, but not necessarily enough to, I don't know. It's just such a low probability protection trade. It works because if price drops aggressively, then you have such a low delta and it becomes, I don't know. Let's look at it. Let's see what it trades for. If you went out that far, okay, you do like the $34 put, it's $3. It's a 20 delta. Well, if the 20 delta becomes a 50 delta, I'll do the math on that. Let's say we go 20 delta and we have the move that would be $9. Oops, 20 delta would be 0.2 times 9. I mean, you pay $2.94, you make another $1.80 on top of that. It helps you protect it. But from your 40, it's like right now my break even's around like $44. If I'm only decreasing my cost by $2, that's why I'm not going way out of the money. Right? Like this is if you wanted to hedge this way, then you do multi contracts and out of the money. Because if you did 2 contracts or 3 contracts, well, then this helps me go from, a 294 debit to a 350, $4, 450 credit, and I'm doing it on 2 or 3 contracts. That's enough to help me lower the cost basis. But now you're playing the game where it's not 100 shares for 1 put. Now it's 100 shares for 3 puts or 4 puts or 5 puts. It's a different way to hedge. I think the way I'm doing it with a collar trade is the higher percentage hedge, where if I need the protection, it's pretty much at the money, and I can get that payout. That makes sense? Yeah. Because that trade, I mean, as it speaks right now, that is a 25% profit target, or 25% probability of profit, that this thing becomes an in the money. You've got about a 20% chance this becomes in the money. So it's just a low probability hedge. I think with the markets, stretched as they are, we're multi-standard deviations above. We have had, I mean, week-wise, I don't know how many weeks in a row we've had on silver, but it's been pretty crazy. Silver has been, I would say, since, let me just do a bar count here. Since this pullback that we had back in March of this year, so I mean, really March, April, that was the nastiest pullback that we saw. Since this level, I mean, that's 26 weeks, and this thing has been just ripping. We are up 63% since the bottoms in April. I mean, that's more reflexive than the S&P. That's more reflexive than the NASDAQ. Gold and silver have been 2 of the best performing assets this entire year. It's a little crazy. It's a little steep. It's a little overextended. I think that we can see that on a chart. But all the more reason that if this thing does drop, that here's what I have. And if this idea of buying shares right now at the top makes you nervous, then don't do it. Okay. But my point is, if I buy the shares here and I can at least lower my cost basis, that's what I'm trying to do. In addition to that, what is the easiest way to trade this? Set a buy trade, set a buy trade, set a buy trade, set a buy trade, set a buy trade at dollar levels that you're comfortable with, right? I'm buying 100 shares and I'm going to protect and nurture that 100 shares. If I just dollar cost average, if 100 shares is going to cost me $4,300, you may not want to do that, right? But if I'm willing to allocate, let's say $4,000, well, I can buy it once, twice, 3 times, 4 times. Well, there's a $4,000 position. And I can get it with a cost basis of some, let's say all these levers are filled. Well, my cost basis is going to be somewhere in the middle, right? If they're even allocations, so there's $1,000 there, $1,000 there, $1,000 there, $1,000 there. I'm going to be right in the middle. So there's my break even. And if now I'm in for $4,000 with a break even of 36 and change, now I can maybe put on a buy put. Maybe I can sell the call. Or I'm just happy that, look, I bought silver on a dip, right? I bought silver on a dip, and now do we go back to the highs again? Well, if we do that, then we get a profit run of $7 to $8. And so I'm in for $4,000 on dollar allocate or dollar cost averaging, and then I get $6 to $7 of price appreciation. And that's a pretty good gain, if you ask me. Right? You make $600 on a $4,000 investment. That's pretty good. So anyway, there's a lot of ways to do it. What I'm sharing this morning is I'm doing the collar. I'm going to buy the shares because I went from, and look, I've been in this trade since 2022. So when we had this first rip during COVID, I was long silver into this $14, $15 zone. We had COVID. We ripped up here. Once we pulled back into this 5-0 zone, I started getting long again around $17, $18, $19. So you can see, I mean, my chart goes back this far from the COVID swing. There's my measure move to symmetry. I started participating in silver way back here. So this has been an enjoyable run. Granted, it wasn't fun from 2022 to 2023. It got a little bit more exciting in 2024. And as this started to show signs of trending, I got really excited of, you know what? I think silver looks better than gold. The gold-silver ratio favors silver outperformance right now. And what happened? Silver did outperform, and we ended up stretching up towards these all-time highs. Cool. Well, I could see that trade. If you go back probably for the last 6 or 8 months of any session I've done talking about silver, what I kept saying about silver, why I liked it more, is I can see the historical highs. So I can see it as a price target. And so as this was showing signs of promising bullishness, this was a profit target. And I hit it. Therefore, I'm protecting my profit. Okay. I know that silver maybe changes and says, hey, look, it's a strategic metal now. It's going to go to the moon. It's going to go $70, $80 a share. Cool. Great. But I'm going to take profit and now use it as an investment vehicle and have a proper percentage allocation versus letting a position here that was about a 5% stake in silver double, right? I mean, that's a good profit. So what I'll do is I'll kind of reestablish a percentage allocation that I want. Make sense? All right. Okie dokie. I wanted to share that this morning. I'm going to spread that out over a couple of my other accounts, establishing some SLVs. I do have some dollar cost average positions in. They're all pending. I'll show you right here. So this is one account, but this is matched up for all these other margin accounts. I have a, let's see here, put. I have a bull put spread. I have shares at $36, shares at $34. These are dollar cost average levels, by the way. $36 on buying shares, $34 on buying shares, $32 on buying shares, $28.50 on buying shares. And then I took profit yesterday at 44.09. So now I close out long calls and shares. Now I'm doing the buys with the collar. But dollar cost average levels 36, 34, 32, 28.50. I will buy 27, 29, 31, and 35 shares. It's roughly a $2,000 allocation into each level. Okay, so that's an easy way to trade it. But dollar cost averaging doesn't provide downside protection. It lessens the allocation. So rather than getting all in right now, okay, I'm in for a bite here and a bite here and a bite here and a bite here. And my dollar cost averaging would be, okay, so now I own this total allocation with a price that's way different than current levels. But here's also the deal. If price doesn't pull back, I don't get filled in those levels at all. So there's no money to be made here unless price pulls back, which is why I'm going to be more active in at least establishing the trade that I did today. I buy the shares, I establish a collar trade, I finance my put. If price goes down, which I expect it to, I have downside protection. If price chops around here and goes higher, then you know what? I get it called away at $50 and I can generate an extra $700 of income. Okay. But to the downside where I think we're going to be protecting, I think we need to be protecting a pullback into, 34, 32. I mean, this last major breakout point was back here around like $33. What happens to this collar is SLB basically just remains flat until expiration. I mean, then I put on another collar. If nothing happens on that, I mean, so here's a question for you, Mike. By January of 2028, do you think that silver is going to be flat? Just a question. But I think by January 2028, I don't think silver is going to be flat. I think silver is either going to be bubbling higher or having a topping pattern correction. Like I think we have to have a correction more than anything else. So what I'll be paying attention to is if it is worth my trade management to protect the put. If it goes dead sideways for the next year or two, then sure. What happens? Well, my cost basis is $43.43. And what do? I'll go out another 12 months and I'll sell a call and I'll buy a put, and I'll finance it, and I'll look at the exact same trade. So I'll cap my upside, but I can finance the downside in case it drops. Right? Yeah. So, I mean, look, worst case scenario is I have downside protection and I have upside capped. Worst case scenario is price goes down and I do nothing. I do absolutely nothing. Well, I know that my cost basis is $43.43. If by the time this rolls around to expiration, if price is up to $47, $48, $49, $50, $51, well, at least I know that I'm getting called away here for profit, right? If I didn't manage my put. But the reason I took the trade is I want to manage the put. That's why I took the trade. Because now I have at least 100 shares. I've got more allocations lower. If price falls, and here's why. I want to have in some of my margin accounts, I want to have probably about a $10 to $20,000 position in silver. Okay. It's going to be somewhere between like a 7 to 10% allocation. I think between gold, silver, having about 10% in each, and then maybe another 5 or 10% of Bitcoin, and then the rest I'll play indexes and ratio spreads and individual trades and stuff I do a lot for my Project Options Edge. Right. And that way I can always be kind of flexible on income trades. I can allocate, to the equity side, index side. I can be really creative on the option trades that I have. And then as far as ownership, owning maybe some SPY, some Qs, maybe some Dow or some Russell, owning, but selling calls around them, or playing the campaign trades, and then having an allocation of things I think are going to continue to appreciate. Gold, silver, Bitcoin should be appreciating assets. I think they're all the view of them right now is way different than owning cash. Okay, if it jumps over 50, how do you manage? I really don't. I mean, if it's over 50, I'm just going to let it get called away. There's nothing I can do. It's like I chose to sell a covered call. That is where I'd have to let price go. I can try to roll it, right? I can try to roll my 50 out in time and up in price, but I'm already out to 2028. So I've kind of tied my hands there until I wait a little longer. Look, these are all great questions because here's what matters. These are all really good questions to ask because every trade you do with options has a trade-off. What is the good thing about this trade? I have immediate downside protection. What's the bad part about this trade? I cap my upside. What's the good thing about this trade? Well, I lowered my cost basis by 35 cents. What's the bad part about this trade? My break even still $43.80. And so a price drops, I'm like, well, I've got to manage my put side in order to lower my cost basis. Every trade in options has a if then, right? And that's why I keep going back to, if you are interested in learning this stuff, practical options, there's always a trade-off. If I do this with my option trade, what does this mean in my portfolio? What do I need price to do for me to make money on this trade? What do I need price to do for me to be protecting my position? What do I need this to do to help me make money on this investment? Every trade we take before we ever press enter, we should know what our max reward, max risk, what we have to do for like plan A, plan B, plan C. So I think trading options is a lot like playing chess. If you learn, look, I learned how to play chess on Nintendo. It was a game called Battle Chess. I'll show you right here. Okay. Why did I learn how to play chess early on? Because it was animated. If it was on a computer and then it went to Nintendo, the pawn, if they got into a fight, it went into a fight scene and it was an animated game. I thought that was really cool. So I learned how to play chess as a video game. But when you're thinking ahead of like, well, if I do this, then what happens? Well, the opponent can do this move, this move, this move. So you're kind of always thinking like, if this is what I'm doing in the market, where do I need price to be to make money? Where's my risk? What's my reward? That's why the nice thing about trading options is if you're trading defined risk, you know that the worst thing that could happen is I've got this risk on the table. That's the worst that could happen. That makes sense? So no, I'm happy you're they're asking the questions because all these questions pop up. This is how we think about a trade. If you place this trade, what has to happen? Right now, I know for that silver trade, if shares go up above 50, right now, unless I can roll that, I'm not going to make any more money. So my break even at 43.50 or 43.40 is going to get called away at $50, and there's nothing I can do about that unless I'm going to go out in time and roll it more. To the downside, I'm almost getting immediate protection with a 43 long put. If price drops, I can protect the put side. And my $43 break even will go hopefully down to like 39, 38, 37, 36. While I'm also waiting for some of these naked puts. While I'm also waiting for some of these dollar cost average levels. And that will ultimately let me build up the position that I want to own more silver. Okay. Rather than justifying, well, I bought silver back here. It's now up here. If I let this appreciation drop by 20%, that's not fun. I want to take some profit. And then I want to reestablish another position. If this takes a while to get back to highs, at least I'm starting. This is my break-even price. Okay. Versus taking this position and making it larger. I don't want to necessarily do that. I want to try to keep the allocation about the same percent. Okay. All right. But these are all good questions. Look, no bad questions here in these sessions. Daily profit plan, bring your questions. Okay. All right. Quick win today for daily profit plan. That was fun. Is anybody still in the trade, by the way? I'm just curious if you're trying to go longer for some profit. I'll see what it's trading for right now. But SPX filled. It's trading for 85 cents. So we got it a pretty good fill. 75, 80 cents is a good profit target. Nice mechanical winner. So today, trade number 500. Trade number 500. That's fun. Live trades, by the way. So our live price this morning is around 67.50 or so. 67.50. SPX 10-7 expiration. We did the 70 by 75. 67.20. 67.15. So that was filled at $1.05. Closed out at 75. Taking the winner on that 395 risk. Okay. So quick winner there. Mark says, in my second Condor, first one out 35%. Okay. All right. Look, we're coming up into a pretty key level. This is that positive negative gamma that I talked about. Here's going to be a really important spot for the market today. If we get through 67.30, if we break below this, we go into negative gamma. Negative gamma below 67.30, positive gamma above it. So here's what I'm telling you is important today. If this market bounces up, that is support. And this market continues to be supported by gamma, positive gamma. Now, that doesn't assume that I'm going to just put in a bull put spread that the market's going to bounce. Okay. I have been talking about corrections, a 21 period moving average hit, a 50 period moving average hit. I've been talking about it for literally weeks, like ad nauseum. It's been, I feel like I'm stupid for wanting to be like getting a correction. Give us a correction. Give us a correction. So if we roll into negative gamma, I just want us to be aware, like we don't have to stay in positive gamma. If we're going to have any weakness window, extending the shutdown into another week, maybe having no more job data this week. I have no idea. But what to look for today is if it bounces here, we have our high for the day, our low for the day, and the market might settle somewhere in between. And what would you go back to and summarize today? Well, if we stay between the 50% ATR and between the 50% ATR, it's yet another day that just kind of grid trading the market works out. And that's daily profit plan 101 is just trying to find levels where we can sell premium here, and trade inside these likely ranges. Okay. So just throwing a level out there, but it was nice to take a winner home today. And that should be making those butterfly spreads look a little bit better as well. If I go into my positions. So butterfly spread, daily profit play closed, the 10-10 expiration. Now this is up $56. This one's up $75. Most I can make is 200. I'm up 135 right now. Maybe that's worth protecting. I mean, I have about an 88% chance of profit on this trade here, and I have a 91% chance of profit here. So unless the market's going to get really excited to the upside, this week. One thing I want to look for, when is this U.S.-China APEC summit? November. Okay. So this is where I think kind of this is probably another kind of bullish catalyst for the market. If there's going to be some indecision, this is kind of the perfect window for it is like now until this. I don't really see any major catalyst. The Fed's going to cut at the end of the month. Whether we get non-farm payroll this week or we don't, or we have CPI data next week or we don't, I have no idea. Okay. But it's like if we have a weakness now until like October, November, if this is a weakness window, this is where I think the market pivots and we have a Q4 finish that's strong. I think there will be some US China news and relationships and negotiations and stuff that are going to be more positive. Especially if the market is down, this is a good way to kind of boost the market and kind of juice those quarter four runs, lift animal spirits, so to speak. Okay, so I want to be mindful of that one. I think that's important to recognize. All right. So coming down towards the 6730, that's a key level for today. Again, I mean, if you want to get a little bit more aggressive on the sell side, it's like I can look and see if we maybe can get some premium at these lows today. It should be unlikely to hit them. It really should be. VIX has climbed barely, so it's not really doing much. Can we get anything around the 67? This would be 66, 70, 75. Let's see. So for today, no. I mean, right now that 70 by 65 bull put spread is trading for, nothing. So that bull put spread is worthless. I mean, I'm not going to make any money trying to go that far with money. Now, setting it there, if I set this 5 wide and all of a sudden price falls, I mean, sure, maybe I can get, some premium on that, but it's like I'd ask for $1 to risk no more than 4, but price is going to have to fall pretty aggressively. Okay. And if I did sell that level and make sure that's a decent spot, so that's a 79. Yeah. I mean, if I did like the 70, that's the VIX box. I'll throw it out there. It's unlikely going to fill, but I'll do a 70 by 65, let it pend at $1. If price falls and we can somehow get filled in this today, it's going to be unlikely to fill through that VIX box. So maybe we get filled in the trade. Wishful thinking. But I'm happy overall just taking the daily profit play, $1.05 down to 75, nearly a 30% win. I'll take that all day on a daily profit play. And so where we are at for today, if we have a little bit more pressure to the downside, do we find 67.30? If so, what happens here? Positive gamma, negative gamma. It's a decision point for the market today. Okay. If we slip below it, well, there's a gap right here the market may be interested in filling. There's a low right here the market may be trying to come after. And we're also stalling at all-time highs, right? So if we're stalling at all-time highs and the market rolls over through that, well, maybe that 21 period on the daily time frame is looking doable for a pullback. But honestly, the day doesn't have to do, we don't have to do anything else. The day is done. We took profit on daily profit play. That's it. Mission accomplished. Now the question is, don't overtrade. Do I need to force another trade? Well, if I'm going to, I'm going to sell way up here and I'm going to sell way down here. And if it gets filled, the probability is we'll stay somewhere within the range. But if price just goes here for the rest of the day, like my job is done. I don't need to force another trade. All right. Okay. We've got some more time together. I'm gonna push my webinar to another time. I think today for Technical Tuesday, we dove into the markets. We talked gold, we talked silver. I did anatomy of a trade on some silver. I'm gonna add that into my portfolio. And we've got some trades running on pinch point. We got one that filled today. I am running a pinch point live trading session today. Okay. So I'll make this very quick. If you'd like to jump in to my pinch point scanner class with me today at 1 p.m. Eastern time, 1 p.m. Eastern time, it's going to be a live trading session. prosperitypub.com/pinch. That's the website. I'll share the link. So prosperitypub.com/pinch. Deanna, can you post that link for me? I know when you post a link, it actually pops up as a hyperlink. When I post it, it just goes as chat. But we are knocking off. So originally, the pinch point scanner a la carte on my website is $39.95. We have the pinch point scanner for 1 year at $14.95. You get class with me today. If you'd like to continue to have my alerts, I have an alert service that goes with this for 12 months. If you upgrade, there's a couple ways to do it. If you come in on my pinch point, here's my Telegram for the pinch point live trade sessions. So I'm running a class today. This is for anybody that has pinch point scanner. All right. So if you have the scanner for a year, you can come into class today. If you have the scanner and you want to trade with me for the next 12 months, then you can upgrade the scanner to a lifetime. So you can do a lifetime upgrade, get 12 months with me, or you can talk to our customer service team, give us a call, or so you can give us a call 904-706-3537, or send our team an email, support@prosperitipub.com, and you can ask for upgrading to my trade alerts. So this one just got filled today. That one closed for profit yesterday. We took profit last week on Hood. It hit the profit target like we wanted at 30%. That's a new trade. That's a new trade. So we're going to take some time to address these trades today in class. And then we're going to also, what I think is more exciting, is find some new trades today. Let's go to one-click trading right inside your classroom. You don't have to download anything. You just go into your classroom, go into your pinch point scanner, and you can see the exact same trades that I see. So I go into pinch point scanner, access the scanner, over 9,000 stocks. We have 31 that are actionable today. So we're going to go from top to bottom, price these out, and see which one looks good, or which ones look good for a trade for us that fits our parameters. I want to take a trade where I have upside potential that is greater than my risk. So if I'm going to risk 250, I want to at least make 250. All right. If I'm going to risk, 5, I want to make 5. So a lot of times what we do is if I take a trade that's $10 wide, I'm hoping that we're only paying like $4.75 for it, $4.50 for it. If I'm taking a trade that's $5 wide, I'm hoping that we're paying $2.50 or less for it. So we have a little bit more upside. Okay. All right. So we've got 31 to pick from today, which is great. That's 9,500 stocks down to 31 that are actionable. These are all likely going to have some direction. Now, why don't I trade all of these? Because these are not all super common stocks, right? Some of these will have a market maker move or expect a move of maybe $7 or $8 over the next 30 to 60 days. And we look at the option strikes, and maybe these strikes are like $2.50 to $5 wide. So I don't have the precision on some of the option trades to take the trade that I want. So my job, that's why I have the alert feature to go on top of this, is if you want to price some of these out with me, you'll see that there is a method to my madness when it comes to whether or not I think we have a good, precise fill in the options market. Because if the market makers, the expected move is $8 and it's 5 wide, I don't really have the precision to get the trade that I want. Does that make sense? And also I'm trying to make sure it's cost effective. So if we're going to get, whatever our risk is, it's like I want to at least have that opportunity for reward. And that way it's easy for us. If we have a 100% reward potential, it is easier for us to take the 30, the 40, the 50% returns, and we can get those automatically closed out by the brokers. Okay. All right. So if you would like to join me for my pinch point session today at 1 p.m. Eastern time, then you can go to prosperitypub.com/pinch. I'll just type it in. You can copy and paste it. prosperitypub.com/pinch. Or if you want to get the access, talk to our team, 904. I think I've memorized this, but I haven't. 904-706-3537. Okay. So I just typed in the chat for everybody, prosperitypub.com/pinch, or call our team if you want to talk to somebody over the phone, or email support@prosperitypub.com. Okay. 1 o'clock today, masterclass for pinch point live trading session. Project Options Edge. We've had plenty of new trades. We did a nice thorough masterclass last week. That was a lot of fun. We have a lot of open positions that are sitting at like 95% profit probability, 97, 98, 99% probability. We'll make that decision as it comes to more capital efficiency. But I mean, these are great trades, and we're probably going to be close to 93, 94, 95% win rate on Project Options Edge this year. Again, this is another one where I don't have webinars on Project Options Edge. You just hear me reference it. This is kind of my, I just call it my whatever it takes service, where I can trade whatever strategy I want. It's fully discretionary, and I do a lot of really solid income trades there. Pinch point, Awesome dashboard, gives me trades that should give us direction coming in the next 30 to 60 days. Double ups, great for high reward, low risk trades. Newsbreakers, earnings will be picking up here in the next week or two. So newsbreakers get very, very busy. We'll probably spend some more time on that next week. Waterfall income, did take a trade yesterday. I forgot to post that in the alert section. I apologize for that, but the trade is still valid. Daily profit play every single day. Cool. All right. All right. What else you want to talk about? Let's go another 10 minutes. So overall, markets rolled over a little bit. Futures down into the red. SPY is down. S&P is down. NASDAQ is hanging in there. NASDAQ is I think AMD probably lifted cues this morning. AMD had a huge bump to the upside yesterday. It faded a little bit, but it's up today. The Dow is down. The Russell is down. VIX is not really jumping higher. We're crossing into that positive negative gamma pivot point, 6730. This is going to be a really key level for today. Okay. And look, I'm not going to be upset. Here's why I wouldn't be upset. If we start to go into negative gamma, I won't be mad. And here's why. I still have a trade where I'd love to see price get below 6640 by the end of the week. Okay. I have a waterfall trade and I have is it a Brooklyn butterfly? I have two trades where I have a 6640 and a 6655 and a 6640 and a 6660. That would be actually that one's out for, so there I have one trade. It's a 10 expiration. The other one is rolled out to the 31st. So that one should be okay. But the 6640 10 expiration is obviously this Friday. So if we go into negative gamma, I am encouraging this market to go as aggressively as it wants to the downside. Okay. I don't know if it's going to happen, but I can always be optimistic, right? I'm a glass half full kind of guy. So if we are going to pull back to the 21-day moving average after hitting multiple all-time highs, every time we've had a high, market falls, high market falls, high market falls, high market falls, and we've hit several all-time highs without the market rolling over. Hasn't fallen. Is it possible that we fall to this 21 period? Well, if it is, I can reduce some risk. If it gets below this or briefly below this, then I can maybe get lucky on a 6640 trade. So we talked about these yesterday in Waterfall, kind of at length. But if we're less than 6640, we turn this into a $2.90 winner. If we can reduce our risk, so let's say we're in between 6640 and 6660, we reduce our risk. I'm on the hook for $12 and I want to say about $12.10 of risk is my max. Okay. So, I'm willing to accept that risk. I don't want to lose that. But if price comes down at all this week and I can either one, roll this for a credit and kind of stay alive in the trade, I'll consider doing that. Or two is we survive by the skin of our teeth and we come down below 6640. Okay. Mike says, if you get called away early. Well, remember, I own the shares. So if the broker can't just take my shares away, I have a sell call at 50. I have assets at 43. I have the position covered. It shouldn't be called away. Okay. If it is called away, then I'm managing the long side of the trade anyway. That makes sense? So if I have a $50 sell call, but I own SLV at 43.75. Okay. So if this is called away, I still have the long shares. Right. So if it's called away, it's like, what's called away? You're telling me like the broker's not going to assign me negative shares because all that's going to do is neutralize my position. So if it's called away above 50, the broker should not be able to execute my long shares and my sell call. That's my job. So my job is to manage that trade. The broker shouldn't be able to call me away. Now, this might happen. The broker could assign us, right? If they assign me 100 shares short at 50, well, that's going to offset the 43.75 that I'm long. So the net result is I just close out my long shares with the assignment. So again, the broker is going to make your life a lot more miserable if they're trying to call you away or assign you negative shares. So what are you talking about, man? I'm not getting assigned anything. So little to no assignment risk. I have a sell call. Okay, that is covering my owned shares. I have a buy put. There's no assignment risk. So I already own the shares. The only thing that the broker could do is assign me a short position at $50. If SLV rips up to $70 and the broker says, "Hey, this clown's got a $50 strike to sell. Let's assign him 100 shares short." Well, I own the shares at 43.75. So all it's going to do is offset that, and I'm going to make the same amount of money that I did. Here's exactly the math. If I have shares at 43.75 with a 35-cent credit, if they assign me 50 shares short, then I offset my 43.40. I still make $660, and the put side is worthless. I still make $6.60 profit on the trade. It's not getting assigned, it'd be getting it called away. So it would be stupid for the broker to assign me negative 100 shares at $50 because I'm already long the position. It doesn't make any sense for them to do that. If they did it, all it's going to do is I'm going to offset my trade by being long the shares anyway. So if that were to happen, then I make the assessment where either one, I just close out the trade and take that $6.60 of profit, or two, if they call me, if I get called away, and I mean, like dollar for dollar, if price is up to 60, 65, $70 and they close my covered call and they assign me 100 shares short, it's going to be this result. Like, I don't need to make the math more complicated. This is the trade. I'm long the shares. If they assign me at negative 100 shares at $50, I'm still making $660. That's easy math on the trade. But little to no assignment on that sell call because I own the shares. And the only way we get assigned short would be if silver's like 60, 65, $70. It'd have to be way up there for us to be assigned short. And it's still going to do nothing, but it's going to be nothing but a profit trade. Okay. So yeah, I mean, if at that point it's like I would just probably close out everything for my $660, consider buying more shares of SLB, do another collar trade, and start the process over and over and over again. That's okay. Yep. Okay, good question though, man. I was just a little confused on the called away or assigned. The broker shouldn't assign me short shares when I have them long. They shouldn't. So the chance of assignment of that would be, or the chance of assignment would be slim to none. But I get it. I've had it happen before. But because you have the long position, you just close it out. But your net gain is still going to be that 660 math that we did on the initial trade. All right. While we've been just discussing, this is officially at positive gamma. This is officially at I'm not going to say I'm going to say the pivot point. So this is a key level on the day. If we are here, I'm going to change this to yellow. If we are here on the day, if we're here on the day, do we bounce to stay in positive gamma? Do we roll through this and get to negative gamma? I don't know. We already won our trade for the day, so I don't care. Okay. But it's going to be an important way to kind of see how the market makers and flows, deal with price. A rollover into negative gamma could be a good sign for more declines this week. And not that that's a fun thing to ever have to experience, but I mean, we've only been talking about a little correction window for a while. And we'll see. So to what degree, it's like, well, I'll look at this chart and this is last week's low. So for me to get even remotely excited about, sneaking by my waterfall trade, we have to see a price after testing the highs. Okay. If it fails off this high and the market continues to unwind a little bit, I wouldn't mind seeing prices try to get down to this low. If price can test, the high and the low, that's rare to do that in the same week, but there's about a 25 to 30% chance that does happen. So we test the high and we could possibly test the low. Well, that's what I'm hoping for. Okay. What is looking better today is if I start to see if you're in, how many of you are in these broke wing butterflies with me? Who's in these 10-10 butterflies with me? The 68.25 pin price and the 68.35 pin price. Type in butterfly in the chat if you're in these with me. So this one is up $60. This one's up $70. I could take the profit on those now if I want to just get out of the trades. Now, what I'm going to look at is the probability of profit. Right now, we're trading at the 25.35 for the 10 expiration. 68.25 is trading for a 7 delta. 68.35 is trading for a 5 delta. Probability of profit on these trades is pretty darn high by Friday based on everything that's baked into the market. Okay. Now, I would hope that this is also including FOMC minutes and potentially non-farm payroll, for better, for worse, right? I'm hoping this is all included with this week's price action. It should be. Market makers aren't stupid. They're not ignoring the fact that we have a government shutdown, but they're likely not assuming that there's no data this week. So I'm hoping that this is true and we're trading at these very low deltas, which is good for us because that means that there's a high probability these stay out of the money. All right. So realistically, let me see if I have this one pending for a 10-cent fill. 25 is pending, and yep, so they're both pending at 10-cent debits. Okay, so if I can get out of this thing for $180, 180 out of 200, I mean, I'm taking 90% of the credit. I'd be happy with that trade. Right? So we got some peeps in this trade with me. We took these trades last week. So these were during some of the master classes we did in Daily Profit Plan. Right? So we got some profit on the table. I'm about 120, 130 bucks right now. I'm going to try to get, if I'm up to like 175-ish, 170, 175, 180 is what I'm going to get if I get filled in my debits here. But just wanted to keep an eye on those. All right. So again, this is wishful thinking, but I would love to see some pricing roll over a little bit and try to get the 66.40 and 55, keep it alive, or the 66.40 and 60, keep it alive. Maybe get lucky. Maybe I'm off. I could risk. It's fine. It sucks. It's annoying, but it is what it is. We'll see what happens this week. FOMC minutes tomorrow. I think that is happening regardless. It's probably going to be very calculated. I know Powell's on the calendar this week. It's going to be some scripted speech. Stephen Marin says Fed policy is more restrictive as neutral rates come down. Restrictive monetary policy has risks. Marin is he's super dovish. The risk is monetary policy isn't adjusted. All right. We just have Fed speak this week. All right. Otherwise, I'll let you go. Key levels for today. A couple things. Pinch point scanner. Live class today at 1 p.m. Eastern time. Everyone that's in my pinch point scanner, I'll see you at 1 o'clock today. If you like the pinch point scanner, if you don't have it, I typed in the links earlier. ProsperityPub.com/pinch or give us a call and get you slotted for that class today at 1 p.m. This is for everybody. Moving forward, if you want to be in these continued live sessions with me, if you want to be in these continued pinch point scanner trade alerts, then you can upgrade the scanner to lifetime so you have it forever, or you can just upgrade to a 12-month alert service with me in pinch point scanner. Right? And for today, if we break through and pressure builds to close below 67.30, can we stay there? Can we break this gamma pivot point? Can we go a little bit lower? Remember, the plus minus on the day was around 20 points. Okay. So this is from the close. So we had price was up about 15 points. Price is down now about 10 points. I mean, is it possible that the market can have a directional day? Sure. Speaking of, Buck, how are you doing on your trade? You did an inverse iron condor. The VIX is at 16. My VIX box, we can see price go somewhere. Directionally, we've been very, very choppy for the last several days. A little noisy, but market makers have been very, very good, keeping prices really contained. Okay, so before I go, I'm going to update on the daily profit play in the tab for the ATR tracker. We'll put in one for today's 10.7. If I can frickin' type. 10.7. ATR up is 67.60. 67.60. 100% ATR up is 67.81. 150. 68.02. Okay, now we're getting some drops. So this is now below, this is below 67.30. We're entering into some negative gamma right now. This could be an interesting day to kind of directionally push lower. 50% ATR, 67.19. 100% ATR is 66.98. And 150% ATR, 66.77. Okay, we opened up this morning around 67.48. Small gap up. Price, quick, DPP. I see winner for 28%. Price has been sliding lower and is now below the 67.30 gamma pivot. So entering into negative gamma. That'll be my note for the morning, and then I'll update this at the end of the day. So win the day, yes. Between the 50%, TBD. Okay, you got that right, Bill. There always will be another day for sure. So here's where we're at. This is my positive negative gamma pivot point, 67.30. We are sliding lower. This is kind of a good thing. I think this is a good thing to keep my waterfall trade hopes alive. This also looks better and better for my October 10th broken wing butterfly. So now this is up $76. This one is up. Let's see here. These two trades. This is up $65. This is up $80. So if I'm getting closer like 160, 170, 175, I might just take the profit off the table. So if I want to adjust these to maybe like a 20 cent, that would give me 80, right? So 160 out of 200, I'm still making 80% of my net credit and taking off the risk early. So I'll keep an eye on this one for today. If we have a pretty big decline, then that could be good. But let's see if price, this is going to be the key for today. If price stays below 67.30, that could mean some more downside ahead this week, right? A little bit more uncertainty around the government shutdown, kind of this blackout window with buybacks. I mean, now look at the put sentiment. We've flipped from positive put or positive call sentiment now to 57 to 11. Like the put side is filling up here pretty nicely. The bull put spread that I put out there is quite a bit lower. We went all the way down to the VIX low around 66.70. It is possible. Like heck, who knows? We might get filled. But I'm kind of loving this move right here. In fact, just to not be a hero, let's go ahead and cancel that brave little put spread. 66.70 by 66.65. I'm going to go ahead and just get rid of it for right now. It was trading for like 27 cents. I got it pending for $1, but that was, what would I cancel? That was the 70 by 65. 70 by 60. I mean, the 150 is 74. The VIX box is 70 on the nose. Yeah. You know what? If it gets filled at $1, I'm going to take the trade. Fudge it. 70.65 for $1. We're trading at 15 cents. I'll put it in. I'll put it back in. But maybe the better play is if I put it in, I'll keep it at $1. I might throw a second contract in for like a $2.50 to $3 credit. I'm just going to try to see if that will defend the lows. That'd be a big directional push, by the way. We'd hit like the VIX extreme. That's rare to see that. Bodine says 67.10 by 05 put spread filled for $1 underwater now. Was it not profitable through the morning? Am I canceling the bear calls? I mean, I can cancel them. They're not going to fill, Randy. So you can cancel them if you want to. They're very unlikely to fill. Oh, it just filled a few minutes ago. Interesting. What made you put that trade on? Is that all you did? Is you just did a bull put spread? Okay. All right. Well, hopefully you see that market want to come back up in a positive gamma, but it is not looking encouraging right now. So we're down to the 50% ATR and we're not bouncing. We're below the negative. We're now in negative gamma. We're not bouncing. So that opens up the direction. I mean, look at this thing. We're down 40 points right now for the morning. And is it possible that we stretch into 100% ATR? Yeah, maybe. There's not much stopping this thing. Negative gamma. So we'll see. We might have a surprise fill here for a buck at the VIX box. That could make things more exciting for the day. So, all right, I'm going to let you go. I'm going to go say goodbye to the fiance. She's heading to Denver this week and go see what's up with my kid. But good stuff. Good winner on the day. Keep an eye on price. You know the levels 67.30. We're negative gamma. We're just below the 50% ATR. Watch these levels. My trade is 66.70. It's way down here. If we get filled, there's still a pretty good chance that becomes profitable. But I would also welcome a healthy drop for this week. You know, maybe that waterfall trade, you know, keep an eye on that for my waterfall income students. We might end up looking to roll that trade if things are looking better, kind of keep it alive for another week or so. Okay. And again, it might offer nothing more than just a chance to roll it for credit, reduce the overall size of our risk versus turn it into a winner. But obviously, if we can extend the life cycle to trade and reduce risk, that's fine. But anyway, keep an eye on this stuff. 67.30 is the key level I'll leave you with today. If we're back above it, then positive gamma resumes. This is what happens. This is what has been happening almost every single day. This is your gamma pivot between positive, negative, gamma. We come into negative, and all of a sudden it's like this market is like backstopped by sell puts, and it just calls the daily bottom. So would it surprise me if the market's like, well, it's far enough. It's far enough. Boop, 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 bounce, and it goes right back up above 67.30. Now, I'm not calling the bottom here, okay? But at that 50%, you can clearly see prices behaving where it's trying to find some type of bid. So this could be like heavy zero DT flows right now. This is the crazy stuff that happens in zero day trading. I'm not going to call the bottom. If we're in negative gamma, this is, you know, a little pullback and additional sell-off. Like we have not had a day that has gone down aggressively for a while. Okay, I'm reading your comments there. But it says it just filled for $1. Quick drop. I gotcha. So you had the 67.10. You might be okay on that. If this thing comes back up to like 20, 25, or 30, you might be able to grab a few bucks out of that trade. Bull put in Telegram. Yep. I thought I did put it in there, didn't I? Nope. All right. So this is DPP update. Today's DPP entry was $1.05. Close 75 cents debit. 28% profit target. Okay. Adding 67.30 is a key pivot level for today's trading. Below 67.30 equals negative gamma. Above 67.30 equals positive gamma. I'm placing a bull put spread pending. So SPX 10.7 expiration. Sell the 66.70 put, buy the 66.65 put for $1 credit. This is at the VIX box low on the DPP indicator. Should be difficult for price to exceed this area to the downside. Okay, so pending order has not been filled, but I'll keep an eye on this stuff all day. Highs at 54, lows at 10. We've gone 44 points on the day from high to low. You know, plus or minus in the day was about 20. So if we come back up to about 67.20, market makers from yesterday's close still do their job. If we're staying below this negative gamma and we get to fresh lows, maybe we get to 6,700 today. I'm totally fine with that. You know, so time will tell. But negative gamma, Keep an eye on it. We'll talk more. 1 o'clock today for Pinch Point. Hope to see you all there. Jump into class. If you have the scanner, you're welcome to class. If you have the scanner for lifetime, if you have my alerts, come to class. Okay. All right. We have 31 trades in the scanner that we'll take a look at. We'll price them out today. It'll be a fun session. Let's keep an eye on the day. All right, buddy. I'll talk to y'all soon. Thanks. Bye.